It is the third week of 2022 by the time this video is being uploaded. And do you realize that a lot of people are talking about a market crash in 2022? Now, of course, one of the reasons is because when we use the word crash in the title or thumbnail, it tends to draw a lot more attention as it induces fear. But of course, this is not being made out of nowhere. If we look at the S&P 500 index and the Nasdaq, both of them had a double-digit growth for the year 2019, 2020, and 2021, meaning that double-digit growth for 3 consecutive years. And even the dinosaur index, I mean Dow, okay, also had 2 years of double-digit growth out of these 3 years, which is 2019 and 2021. Coming in at 22.34% and 18.73%. Now, not to say that after 3 years of double-digit gain, the market would definitely crash, but what I'm trying to point out here is that it is quite rare to see the market keeps up with this kind of momentum. Now, if we look at the S&P 500 index, in the year 2019 to 2021, we have 3 consecutive years of double-digit growth. And then if we look down further, from 2012 to 2014, we have 3 consecutive years of double-digit growth. And then during 2015, the market basically slows down. And also, if we look at 2009 and 2010, we have 2 years of double-digit growth. And then after that, from 2003 to 2007, we don't really have like 3 consecutive years of double-digit growth. Whereas from 1995 to 1919, the market basically go very wild, and we all know that there's a technology bubble kind of things happening during that time. And then we have a 3 years market recession. And then if we look in the history, basically we don't really see a lot of times whereby the market is going up at double-digit growth for 3 years and then it just keeps up the momentum. If you're to compound the return of S&P 500 from 2019 to the end of 2021, it is about 90%, which is close to double. This is due to the strong technology sector. If we look at the Nasdaq, it went up by 35.23% in 2019, 43.64% in 2020, and 21.39% in 2021, which is way crazier than the S&P 500 index. And a lot of the super bullish technology stocks like Apple, Microsoft, Google, Facebook, and even stocks like Tesla and Nvidia, they are actually carrying higher weightage in the S&P 500 index, and that's why we are seeing such a tremendous strong upward movement in the S&P 500 and of course the entire market. Over the long run, I have strong conviction for the entire technology sector. Now, this is because when we look around the world where the big companies are heading right now, as well as the trends that everybody is talking about, from AI, metaverse, cryptocurrencies and blockchain to things like self-driving vehicles and even clean energy. All these things would require technology innovations of some sort, from hardware to software. However, looking at the data alone, I think that we need to have some kind of preparation. Now, I'm not saying that the market would definitely crash. I think that it is wise to at least lower down our expectation instead of hoping that the market will go up at a similar momentum. And this is also one of the reasons why a lot of people are expecting that the market will have some kind of correction, if not a crash. Now, understand that the market is going where it wants to go. It could have a few consecutive years of double-digit growth like how it did in 1990s, followed by a massive recessions, or the market could just have a correction or crash and then straight away recover, or the market could have a crash and correction and then it goes sideways for a period of time. Now, anything could happen. Whatever predictions that we make are just merely a guess, and yes, an educated guess is still a guess. Therefore, I always pray for the best but prepare for the worst. Again, mentioned in my previous video, if you have some capital reserve, you would definitely see correction or crash as an opportunity instead of a bad thing. And this is exactly what I'm going to share with you in this video. The 3 investments that I will personally make if the market were to have a correction or crash this year in 2022. So by now, you should be able to tell that I'm very into the technology sector as far as investment is concerned. So therefore, the first investment that I will personally make should the market has a crash or crisis is none other than QQQ, because you get the best technology stocks and growth stocks out there through investing in this ETF. Personally, I do collect QQQ for my investment portfolio progressively because I'm very bullish on the technology sector over the next decade. Should the market has a correction or crash, I will use my cash reserve to make additional investment into QQQ for every 10% it drops. The next investment that I will personally make if the market has a crash or correction is actually on the semiconductor sector. Semiconductor is a very important subsector within the technology sector, and to me personally, it is one of the most crucial subsectors of all, regardless if we are talking about artificial intelligence, metaverse, cryptocurrencies or blockchain technologies, clean energy or even self-driving vehicles. All these innovations would require semiconductors. And ever since the pandemic, everyone is working at home, kids are studying at home, and we have seen the demand of electronic products basically skyrocket, triggering a shortage of semiconductor parts even until right now. In this era, almost everything requires semiconductors. The demand is here to stay, and the supply needs to keep up. And if we dive into the top holdings of QQQ, at the point of recording, the top two, which are Apple and Microsoft, comes in at about 20% weightage. Now, if we include the next three holdings, which are Amazon, Facebook, and Tesla, the top 5 holdings comes in at about 25%, and none of these are a semiconductor player. However, the growth of this company would anyhow require semiconductors. There are two ways to invest into the semiconductor industry or sector. The first one is, of course, investing into the individual semiconductor stocks, and the second one would be buying into a semiconductor ETF. To make things easier, I'll be investing into the semiconductor ETF, because by doing that, I'll be investing into a basket of semiconductor companies instead of just 1, 2, or 3 semiconductor companies. There are two popular semiconductor ETFs in the market, namely SMH and SOXX. Either one would fit this investment goal. Depending on the opportunities, I might go for either one or both. If I were to only pick one, my choice would be SMH, because the top holding is Taiwan Semiconductor, coming in at an 11% weightage. So basically, Taiwan Semiconductor is the world's most valuable semiconductor players and also the world's largest semiconductor manufacturer. So Taiwan Semiconductor is going to be a very important play in the world of semiconductor for the next decade to come. SOXX is not bad either. The top two holdings are actually Broadcom and Qualcomm, and both of them are very important players in the semiconductor market as well, and their combined weightage is around 17% for SOXX ETF. So it highly depends on which companies you want to have higher exposure in. Expense ratio wise, SMH is a little bit lower at 0.35%, whereas SOXX comes in at an expense ratio of 0.43%, but not really a big difference right over here, to me at least. The third investment that I will personally make if the market has a correction or crash this year is on the metaverse. Not buying a land on the Decentraland or things of that nature, but investing into companies that are actively participating in the metaverse development. So again, just like investing into the semiconductor industry or sector, we can actually pick individual companies that are metaverse related and invest into them. There is also one ETF that is related to metaverse, and we can invest in that ETF and let our capital expose to a bunch of companies that are related to the metaverse, and that ETF is known as Meta. The criticism that a lot of investors make on this ETF Meta is actually the expense ratio coming in at 0.75%. To me, if you have the capital and capability to pick and buy individual companies, by all means, that's going to be the best route to go. However, if your capital is very limited, or you are looking into simplicity and convenience when it comes to investing, An expense ratio of 0.75% is not going to kill you, especially when your capital is very limited. Now, this ETF is great for you to gain exposure up to 44 companies that are metaverse related across 7 different countries. And not to mention that this ETF right now is priced under $15 per unit. If you like to customize the companies that you want to invest in, you can actually go to the issuer's website and look at the 44 companies that they are investing into and pick the companies that you are comfortable or you have confidence with and invest into them, of course. So these are the 3 investments that I will personally make if the market were to have a crash or any kind of correction this year, 2022. And of course, all these are not financial advice. These are just things that I will personally invest into should the market give me any kind of opportunity. So do your own due diligence and homework. That will be all for this video. If you enjoy the content of this video, do not forget to smash the like button, and also don't forget to subscribe for more and turn on the notification bell so that you get notified every time I post a new video. So with that said, thank you very much, and I will see you when I see you, and peace out.